This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Strong start. The Dow rises 200 points. The Nasdaq hits an all-time high as investors around the world cheer the results of the French election.
Still, risks to the rally. Could a government shutdown stop the bulls fast in their tracks?
Open house. Why this may be the strongest sellers market ever. Those stories and more tonight on Nightly Business Report for Monday, April 24th.
Good evening, everyone, and welcome. Well, what a way to start the week. The rally started overseas for stocks, and when the opening bell rang here on Wall Street, stocks took off and didn't look back. The reason, what some investors considered a worst-case scenario in the French election, didn't happen. True, a far-right anti-European Union candidate will move into the contest's final round in 2 weeks. But her competition and the current favorite to win is a pro-business, Euro-friendly centrist and not a far-left flamethrower. More on the French election in a moment. The markets liked that outcome, and investors plowed money big time into riskier assets like equities and pulled it out of safer ones like gold and government bonds. Here are the day's numbers. The Dow Jones Industrial Average climbed 216 points to 20,763. Nasdaq hit a record up 73 points, and the S&P 500 added 25. But before you breathe a big sigh of relief, the market still faces some big hurdles. Here's Bob Pisani.
Are market risks declining? You'd think so, watching the market reaction to the French election. Risks may be lower, but they're not going away. Here's 4 major market risks. First, geopolitical. It's definitely lower. The markets are telling us that there was some risk associated with the French elections. The risks are lower, but with North Korea looming as a threat, geopolitical risk is still very much present. Second, weaker economic data. Still high risk to the markets, my opinion. We're expecting anemic first quarter GDP growth of 1.1%. Other measures of hard economic news have generally been weaker, like retail sales. Now, the bulls are insisting that first quarter economic data has been weak for several years, and the second quarter will show some improvement. We'll see. Third is the high valuation of the stock market and the risk from disappointing earnings. That risk was high, but it's lower now. So far, the earnings news has been good. First banks, now industrials, generally reporting earnings above expectations. And a half dozen large industrial names not only beat earnings, but they raised full-year guidance. Finally, there's still a risk that fiscal reforms will not be working and will be pushed out. President Trump's tax comment last week that a massive tax bill was coming this week is falling short, obviously. We now know there's only going to be a statement of principles by Wednesday. Well, we already know the principles, but we need the details. The bottom line here is there's still plenty of risk for stocks, but the atmosphere is definitely improving. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So let's take a closer look at some of the risks that Bob just pointed out. We begin with the impetus for today's rally, the French election. But what happens next? Michelle Caruso-Cabrera is in Paris tonight.
Across Paris and around France, voters lined up to cast their ballots for who they believe should be the next president of France. For many, the decision was made at the last minute.
When did you decide? This morning? Last night?
This morning.
In the end, Marine Le Pen and Emmanuel Macron came out on top, moving on to the final vote on May 7th. And although early polls show Macron ahead by a large margin, his camp not getting ahead of itself.
We're going to be extremely focused on what's going to happen in the following 2 weeks because everything is possible. As you know, you can have a lot of events during a campaign. So we're very cautious. We didn't open the bottle of champagne.
But the market sure did, rallying around the world on the belief that Macron is a shoo-in to win the second round in 2 weeks. Polls show right now he will handily beat Le Pen.
I think what we just had was the first part of one of the most important elections in Europe since World War II.
Important because this vote is about the future of the euro and the European Union. Macron embraces both. He also wants to loosen the country's very strict labor laws, which businesses say have long stifled the country's growth. Other European leaders fear Marine Le Pen because she wants France to leave the euro, and she supports policies favorable to labor. Several of the other candidates have told their supporters to vote for Macron in the second round. citing Le Pen's anti-immigration policies. While the markets cheered, many young people protested. The followers of Jean-Luc Mélenchon, a candidate many compared to U.S. Senator Bernie Sanders, filled two of Paris's most prominent plazas.
This is the Place de la Bastille. There's a very heavy police presence here tonight because so many young people came out in protest of the vote. They don't like either of the candidates. They say, many of them, that they're not going to vote at all. Are you going to vote?
No, I'm not.
Why not?
Because I don't want to choose between something that's bad and something that's worse.
It's really making everyone really tense right now because it's like choosing between, like plague or Zika virus.
Regardless, those are the choices for French voters when they return to the polls in 2 weeks. For Nightly Business Report, Michelle Caruso Cabrera, Paris.
Well, other geopolitical risks, of course, include Syria and North Korea. Today, the Treasury Department put banking and other financial sanctions on more than 270 employees of a Syrian government agency. The U.S. says the people, many of them scientists, were involved in developing and producing chemical weapons. The new sanctions are in response to the deadly chemical weapon attack the U.S. says the Syrian government unleashed against its own people earlier this month.
And in response to the recent Syrian chemical weapons attack, President Trump called out the United Nations for failing to act. He made the comment at a meeting at the White House with members of the United Nations Security Council. The president also discussed the global threat posed by North Korea.
The status quo in North Korea is also unacceptable, and the Council must be prepared to impose additional and stronger sanctions on North Korean nuclear and ballistic missile programs. This is a real threat to the world.
The Trump administration is preparing to brief the Senate this week on North Korea.
Well, the market is also paying attention to fiscal policy out of Washington, and this week could be a big one with potential movement on tax reform, health care, and the government funding deadline looming. John Harwood is following all the developments from our nation's capital. John, the president has promised a big announcement Wednesday on one of his signature issues, tax reform, and there are now fresh rumors about what that corporate tax rate may be. What do we know?
Well, we know that President Trump has told his aides he wants to stick with the 15% corporate tax rate that he proposed during the campaign. That's been out there for a long time. It's even lower than House Republicans want to go. But Donald Trump is telling people that he's going to stick with that. Now, we don't know how much more detail beyond things like that we're going to get on Wednesday. He took his aides by surprise by saying it was going to be released next week. And so we had been cautioned to think that, well, maybe this will be a general statement of principles rather than an actual plan. But Trump has shown the capacity to surprise, and he may be having his aides work overtime to spell it out.
What about health care Part 2?
Well, health care Part 2, Sue, is no closer to the finish line than it's been before. Remember, it was taking fire from both the left and the right of the Republican Party. Conservatives said it was too much like Obamacare. More moderate Republicans said it would throw too many of their constituents off of health insurance. Now, the way that they've been trying to cobble together a compromise is using states' rights to let some states do it one way and other states do it another way. But we have no indication yet that Paul Ryan wants to risk a vote this week because he knew that he fell way short last time. There's no reason to think he's about to get over that finish line.
And, of course, the government funding deadline comes up on Friday night. There are a lot of sticking points, including whether money will be included to do some work on President Trump's signature item, the border wall. What is the likelihood that a deal gets done and that the government keeps functioning?
This is one area, Tyler, where I think there will be a deal. It could be just a one-week deal to continue the government funding and continue negotiations and keep it open. But I think in the end, they're going to have a Republican-Democrat compromise on spending at the expense of President Trump's priority for the wall. He is not saying that he will veto any spending bill that doesn't have wall money. Democrats are drawing a line there, and they're the ones with the leverage, because if there's a shutdown, that is going to fall on the shoulders of Republicans who control the White House and the Congress.
All right, John, thank you very much. John Harwood in Washington.
Investors are also focused on earnings. This week is one of the busiest of the season, and with the Nasdaq near 6,000, attention will be on results from the biggest sector of them all, technology. Josh Lipton tells investors what they can expect from a few of the big names.
Tech's more than double-digit gain this year makes it the market's best performing sector. Whether that run can continue could depend on the rush of earnings. The big day will be Thursday. That's when Amazon, Microsoft, Alphabet, and Intel all report results. And one big theme this quarter will be the ongoing war in cloud computing, which is an area all of these companies are looking to for growth. Amazon is the dominant supplier of cloud technology. Last quarter, that part of its business did not perform as well as some had hoped. And one worry is that Amazon is now dealing with greater competition from the likes of Microsoft. CEO Satya Nadella has now built one of the biggest cloud businesses in the world, capitalizing on its history of working with large companies. Microsoft could also benefit from signs of stabilization in the PC market, which recently returned to growth for the first time in 5 years. That could also prove to be a big tailwind for Intel. The PC business still represents nearly 60% of that chip giant's revenue, but investors will pay closer attention to its data center operation, or sales of chips for servers, because this is traditionally the weakest quarter for that business. Finally, there's Alphabet. Investors will focus on core Google operating margins, which last quarter saw a decline. That's a key measure of profitability. Investors will find out Thursday if that trend has continued. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Art Hogan joins us now to discuss what all of these cross currents that we've just been talking about could mean for the stock market and your investment. He is Chief Market Strategist at Wunderlich Securities, and he joins us now. Hi, Art. Good to have you with us. The French election, let's start there with the French election. Did you or your colleagues do anything different today in response to those election results? Did you sell anything, buy anything, change anything in your overall strategy?
No, Tyler, we did see a lot of clients that weren't doing anything last week or buying a little protection or shifting into things like the 10-year, unwind those trades pretty quickly. And I think that's natural, right? So we've got a large binary event that could have, a ripple effect to it if the election had gone a different way, understanding that we haven't been very good at predicting these things. So I think you saw those safety trades unwind. We saw a lot of that action coming into the early trade here this morning.
You know, Art, we do have a number of issues supposedly coming up this week. The tax plan, maybe health care, the possibility of a government shutdown. Are any of those events more investable than others in terms of picking stocks within those particular areas or sectors?
Well, I can tell you this. So the policy agenda, the timing of the policy agenda certainly has been a stock market moving event, right? So when Mnuchin as early as last week talked about, this taking time and really pushing the agenda out to 2018, you saw what happened to the market pretty quickly. He comes back in and says, no, well, actually, we're going to have something next week, and it looks like we're getting closer on this. That pulls that policy agenda back into 17. The market reacts positively to that. So yes, is that investable? That's hard to know. What I will tell you is it's not a lock that we can get something done on repeal and replace. And without repeal and replace, you can't get as much tax reform done. So I think having to do repeal and replace first and then tax reform pushes that agenda item out. And I think the market is working its way into that rationalization. I think that in terms of the government shutdown, we've been here before, right? And to the extent that Harwood put it exactly correctly, they want to get something done. Some sort of deal will get cut at the 11th hour because they don't want to own the government shutdown. Even if it doesn't have necessarily a massive effect on what markets do, they don't want to own that. That's not going to be the legacy they want in the first 100 days.
It occurs to me that even if there aren't any home runs this week, what business will look at is an administration that is much more business friendly and less inclined to put new regulations in place that might hamstring business. So that would, all other things being equal, help equities, I suppose. Tell me what your baseline portfolio is for an average investor and how often you rebalance it.
That's a great question, Tyler, and I think that's right. So, with all the machinations and the things we talk about, whether it's implementation of fiscal policy, with some deregulation happening, some infrastructure spend, through all of that, I think that your long-term investors should be thinking about a plan and sticking to it and trying to ignore some of this noise. Whether that means for us, we like 60% stocks, 30% bonds right now, and a 10% cash cushion for new ideas, and we like to rebalance that on a quarterly basis. That way you stick to your plan. You don't make panic decisions like people that sold in front of the election, the U.S. election, people that sold in front of the French election. You can stick to that plan. Now, you do have to rebalance because your proportions are going to get out of place here. The stock market's going to go up 10% on the Nasdaq, and you're overexposed to stocks, and you can cycle that through. But I think the best thing to do for a long-term investor is to have that plan and stick to it and pay attention to that.
All right. Great, Art. Good advice. Thanks. Art Hogan with Wonderlic.
Still ahead, make me an offer. That's what buyers are doing in what some are calling the hottest spring selling season ever.
The Supreme Court has rejected General Motors' effort to block lawsuits related to the company's ignition switches. Those suits could expose the automaker to billions in additional claims. The decision to reject GM's appeal means that a lower court decision stands, and that decision said GM's 2009 bankruptcy did not shield it from liability in some cases. In a statement, GM downplayed potential legal exposure. It said, quote, "As a practical matter, this doesn't change the landscape much in terms of the GM litigation."
Medical device maker Becton Dickinson buys its rival, and that's where we begin tonight's market focus. Becton Dickinson will acquire C.R. Bard for $24 billion in a deal that will add new products to Becton's portfolio and help it create treatments for diseases it currently doesn't focus on. Becton also said that the merger will help sales overseas, particularly in China. Becton Dickinson's shares were off about 4.5% to 177.07. C.R. Bard was up 20%, or nearly so, to 302.41. The drug maker Sanofi is suing Mylan, alleging Mylan engaged in illegal business practices to make its life-saving EpiPen more available and more affordable for consumers than Sanofi's rival product. Sanofi said Mylan offered higher rebates to insurers and pharmacy benefit managers and Medicaid, under the understanding that Sanofi's treatment wouldn't be eligible for coverage. Mylan shares rose nearly 2% to 37.47, and Sanofi gained 4% to 45.90. Hasbro reported a rise in revenue as the toy maker benefited from strong demand for its digital games and as well as licensed products like Nerf and Transformers. We got a few of those at my house. The results easily beat estimates, and it was the first time that Hasbro has beaten rival Mattel in quarterly sales since the year 2000. The shares popped nearly 6% to 101.70. Global retail sales at Caterpillar turned positive for the first time in more than 4 years. The maker of industrial equipment said a surge in buying activity in Asia helped offset weakness in other foreign markets and caused machine sales during its latest 3-month period to rise. The company is expected to report earnings tomorrow. Caterpillar shares rose more than 2% to 96.81.
Whole Foods may go private. The Financial Times says supermarket operator Albertsons is interested now in taking over the high-end organic grocer. The private equity firm Cerberus Capital owns Albertsons and is said to have approached bankers about making a potential offer for Whole Foods. Albertsons, as you may recall, bought the rival Safeway for $9 billion about 2 years ago. Shares of Whole Foods up 2% on the session to 36.46. Amazon reportedly getting ready now to make selling furniture on its platform easier, and that hit shares of the furniture retailer Wayfair. According to a trade publication, Amazon won't mandate that furniture sellers offer nationwide shipping in order to be included on the Amazon website. Instead, sellers will be able to list their products on the site, choose what areas they want to ship to, and also select what delivery services are offered. Wayfair fell more than 5% to 43.48, while Amazon gained almost 1% to 907.41. The pharmacy benefits manager Express Scripts reported earnings that grew and beat expectations, but its revenue was light. The company also upped its profit outlook for the year and said it would likely lose its largest customer, Anthem, once their contract expires in 2019. But if the two companies do cut ties, Express CEO said the company will still be in good shape.
What we feel this does is actually shows the strength of our core model and the value that we've got. As we look forward, we've got 2,900 clients. We will service, if Anthem were to ultimately leave, as they've at least seem to be having decided, we'll be servicing over 65 million Americans. We will have a tremendous amount of scale in the supply chain. And I think as a standalone focused PBM working on behalf of its clients, we have a tremendous future.
Express Scripts shares initially fell after the bell, but ended the regular session up 1% at 67.25.
Spring home buyers were out in force over the weekend, but a lot of them came up short. Diana Olick reports on why this usually busy season for sales is unlike any other.
It's a 3-bedroom, 2-bath home in Burbank, California.
The kitchen's good size.
Nice enough for sure, but the first open house drew over 100 potential buyers in barely 3 hours.
I've been selling real estate for 25 years, and this is the strongest seller's market I have ever seen in my entire real estate career.
Real estate agent David Fogg already had 3 offers on the home before he opened the front door for the Sunday open.
Current inventory levels are at all-time lows. There's fewer houses for sale. There's more buyers than houses on the market.
The number of listings has been rising with the spring temperatures, but the supply of homes for sale at the end of March was still nearly 7% lower than a year ago, and demand is higher, especially among young renters.
It's pretty bad right now.
Yeah.
I mean, not even the height of summer yet, and we have yet to see one that's sold for under asking price.
Cash is king in this market, and prices are hitting new peaks each month.
So we actually bid over asking price, and yet it went way over asking price, I'm guessing, with waiving of contingencies being one of the things. So we couldn't waive contingencies as much as we like the place.
Contingencies like the appraisal.
In a rapidly increasing real estate market, the sales prices are always ahead of the appraised value. So therefore, you really look for those cash buyers who can make up for appraisal shortfalls.
But not everyone can do that. The Zwicker family of 5 is trying to upgrade from their 2-bedroom, 1-bathroom home.
Ideally, we'd love to get into a 4-2, and I mean, the idea of a 4-2 in Burbank is pretty much slim to none.
They're now considering putting an addition on their current home. And that's the kicker. Current homeowners may be able to sell their homes easily, but the price to move up is steep. So more and more of them are staying put. And as they do, that means there are even fewer entry-level listings available. For Nightly Business Report, I'm Diana Olick in Washington.
And to read more about why this may be the strong spring season ever, head to our website, nbr.com.
And coming up, high-tech tools to capture the bad guys.
I'm Julia Borston at the Los Angeles Sheriff's Department, taking a look at all the cool, cutting-edge technology that's being used to fight crime, including unmanned aerial vehicles. We'll have that story coming up on Nightly Business Report.
And finally tonight, law enforcement has a new partner on the beat, the tech sector. And Julia Borston got a first-hand look at how it's being used to fight crime.
Forget stun guns and body cams. The next generation of gadgets are designed to prevent police from being in the line of fire while helping protect the public. Gunshot detection systems can pinpoint the exact source of gunfire, while another system shoots GPS-enabled darts to attach to and track fleeing vehicles.
we've had them shot and keep going.
Captain Jack Ewell at the Los Angeles Sheriff's Department says no matter what the cost of the new technology, if it saves lives, it's worth it, which is why they're using more high-tech gadgets than ever.
The technology improves almost on a daily basis, so we use it more now than we ever have before. The robots are better, they function better, they do more things that they couldn't do in the past. The costs have actually come down, and they're indispensable.
Here at the Los Angeles Sheriff Department, they've been deploying all sorts of robotics, most recently these unmanned aerial vehicles for everything from bomb threats to search and rescue to active shooter situations. These drones give law enforcement eyes from above. And it's not just robotic cameras in the air. They're also sending robots into dangerous situations on the ground and even robots for underwater search and rescue.
We used it in a situation, a tactical situation, where someone was firing a high-powered rifle from a house into a community, and we were able to use this technology to see exactly where that gunman was.
And back at the station, there's powerful software, which helps police file reports and keep and evaluate statistics. Startup Mark 43 says it saved 250,000 hours of work for police in D.C. alone. And the less time spent filing paperwork, the more time those police can spend on public safety. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Fascinating stuff. Well, I never thought I'd see the day where the French election was really determining what happened on Wall Street, but today it did. And let's take a look at that rally on Wall Street. The Dow climbed 216 points. Nasdaq hit a record, up 73 points. And the S&P 500, for good measure, went along for the ride, rising 25 points.
It is so good to be back together.
Nice to be back together. It's been a couple weeks.
2.5 weeks. All right. That's it for us tonight on Nightly Business Report. Thanks for watching.
And I'm Tyler Mathisen. Have a great evening, everybody. We'll see you back here tomorrow. We'll be together again.
Yep.